Every single time you swipe, tap, or click to buy something, you aren't just making a purchase. You're actually interacting with a massive, invisible machine designed by literally the smartest minds on Wall Street. Welcome to This Explainer. Today, we're pulling back the curtain on the credit card industry to show you exactly how billions of dollars are quietly extracted from everyday people. Buckle up, because once you see how this whole game is really played, you are absolutely never going to look at your wallet the same way again. Right, so we've all seen these messages pop up in our emails or our banking apps. Congratulations, you're pre-approved. Or earn free travel. It feels amazing. It feels like you're in some exclusive club, like the bank is doing you this massive favor and just handing you the keys to free perks. But let's shatter that illusion right now. These are not favors. They are highly optimized bait for very carefully engineered trap. And that brings us to the really uncomfortable truth that drives this entire financial empire. The product isn't the credit card. The product is your debt. Seriously. Banks do not make their billions when you're financially responsible and pay everything on time. No, they make their billions precisely when you don't. Which kind of forces us to stop and ask a pretty terrifying question. Are we actually making our own financial decisions when we walk into a mall or hit checkout online? Or are those decisions being quietly engineered for us behind the scenes? To answer that, we really have to look at how the system views you. Section 1. The credit card illusion. To understand this illusion, just imagine two customers walking into a luxury store. Customer A buys a huge TV and pays their credit card bill in full every single month, never misses a payment. Customer B buys the exact same TV, but they only make the minimum payments every month. Now, most people assume that the super responsible customer A is the bank's favorite, right? Nope, not even close. Customer B is the ideal user. Customer B is the one generating thousands in interest and late fees, while customer A generates way less profit. So the absolutely crucial point here is that banks aren't just in the business of lending money. They are quite literally in the business of selling time. The whole system isn't designed to get you out of debt quickly. It's designed to keep you just comfortable enough to stay in debt a little bit longer. They want you floating in that sweet spot, letting those tiny monthly interest payments quietly compound into literal billions of dollars for the bank. Section 2. The psychology of debt. The biggest weapon banks use to keep you in that sweet spot actually isn't a high interest rate. It's human behavior. I mean, think about it. If you had to physically count out and hand over $1,000 in crisp cash for a new phone, you'd feel the friction, right? You'd probably hesitate. Paying with cash feels like an immediate, tangible loss. But paying with a credit card? It's just one seamless tap. Poof. No physical money actually leaves your hands. Removing that friction fundamentally alters our psychology. It makes dropping $1,000 feel totally disconnected from reality. It just feels like a future problem. And then notice how a tiny, seemingly insignificant number totally hijacks your brain. 2% cashback. Every single time you hear earn 2%, your brain entirely shifts focus. You're no longer thinking, oh man, I'm losing $500. You are thinking, wait, I'm earning points. It is a brilliant psychological trick to encourage you to overspend, all while you're chasing literally pennies. And then, of course, this statement arrives in the mail. You might have a massive $5,000 balance, but staring right back at you in bold text is the number 100, the minimum payment. At first glance, $100 feels incredibly manageable. You probably breathe a sigh of relief. But make absolutely no mistake, this is, without a doubt, the most dangerous number on your entire statement. Because when you make that $100 minimum payment, the reality of compound interest is just brutal. A massive slice of that payment goes straight back to the bank as interest. Only a tiny, razor-thin fraction actually goes toward reducing your original debt. That is exactly how really intelligent people stay trapped for years. Not because they're totally irresponsible, but because minimum payments barely even scratch the surface of the actual balance. And just when you think you're finally getting a handle on things, you get another email. Congratulations, we've increased your credit limit. It gives you this instant rush of dopamine. It feels like a reward for your financial success, right? Like a gold star from the bank. But in reality, it's just a bigger cage. It's a fresh temptation engineered specifically to get you to spend more. Because remember, the more you borrow, the more profit they make. Section 3. The hidden profit ecosystem. Now, You might be wondering, what if you never actually carry a balance? Well, let's walk through the invisible financial matrix behind a super simple purchase. Step 1, you swipe your card for, say, a $100 pair of shoes. Step 2, the merchant actually pays a processing fee just to accept your card. Step 3, a portion of that fee goes straight to the card network and your issuing bank. So even if you are customer A, meaning you pay your balance in full every single month, the bank is still extracting a cut from the merchant the exact second you swipe. The sheer genius of their business model is that the house always wins, no matter what you do. When you simply swipe your card, the bank extracts a merchant fee, giving them constant revenue. When you carry a balance, they generate compounding interest. And when you chase those sweet rewards, you end up overspending, which just fuels massive ecosystem growth. It's a continuous, never-ending river of revenue. So who is really winning from these rewards programs? The harsh truth here is that those free first-class flights and luxury hotel points, they aren't free at all. They are entirely funded by merchant fees and the extra, totally unnecessary spending the programs engineered you to make in the first place. The reward feels free, but the extra spending definitely isn't.
Section 4. How to beat the system.
Okay, I know this situation sounds incredibly stacked against us, but you don't have to go completely off the grid and switch to a cash-only life. A credit card isn't actually the enemy here, debt is. So here are 4 rapid-fire rules to use credit without becoming the product. Number 1, treat credit like debit. Literally, never spend money you don't actually have in your bank account today. Number 2, pay the full statement balance every single month to completely neutralize interest. Number 3, never, ever let rewards influence you to buy something you didn't already need. And number 4, keep your credit utilization low to build a really healthy profile without overextending yourself. You have to follow these rules religiously, guys, because you need to remember exactly who you're up against. You're not just fighting your own weekend spending impulses, you're facing off against an incredibly well-funded, highly optimized machine. Banks literally employ armies of economists, behavioral psychologists, and data scientists. And their sole, full-time job is to study your habits and figure out exactly what keeps people in debt. But now you see the matrix. You know their game. And you can anchor yourself to this super empowering truth. Financial freedom doesn't actually come from earning more money. It comes from keeping more of the money you already earn. It comes from plugging those invisible leaks in your financial life. So the next time an email hits your inbox telling you you're pre-approved, or the next time you step up to a register to tap your wallet, just pause for 1 second. Ask yourself, is this really designed to help me, or is someone out there expecting to profit from my next decision? Something to think about.